Welcome to First Issues. A few weeks ago, we unpacked the Rand Merchant Bank RMB's Where to Invest in Africa Report 2024 with Chief Economist and Head of Research, Isa Mhlanga. This follows the realization that Africa is navigating significant turbulence and transformations on multiple fronts, both geopolitically and economically. The report therefore aims to give investors a comprehensive analysis of 31 African countries that participated, uncovering underlying key drivers of each country's performance and informing their ranking. Following that conversation with Isa, we thought it fit to further unload the pillars that will influence the macroeconomic developments across Africa and indeed other parts of the world to help investors make informed decisions about where to place their bets, so to speak. The pillars are economic performance and potential, market accessibility and innovation, economic stability and investment climate, and social and human development. We have this dialogue over the next few episodes with Economist at the First National Bank of Botswana, Gomolemo, Basele, where we first discuss economic performance and potential. Gomolemo, thank you so much for coming on First Issues and affording us your time. We're here today to give tips to investors on what considerations they should be making when they're looking to, put some money where their investment, the return on their investment would be bountiful. Let us start first by talking about economic performance and potential as one of those key considerations to make.
Great. Firstly, thanks for having me. And hello to your viewers. So in terms of economic potential or economic performance and potential, definitely it's a key area that investors should look to when choosing a market to invest in. So seeing how, for example, an economy has performed over a certain period, which direction or have there been any structural shifts from its core output into other sectors, and what opportunities does that present? I think those are some of the key things investors can look to and see how that aligns with their line of business first and foremost.
Let us talk about the potential, right? Potential is greatly dependent on a variety of factors, but then that can be risky. Is there a way that the risk could be mitigated in such a way that even if you make the investment based off of the potential, the returns can still make sense, even if the potential or the economy does not live to its potential?
An interesting question. Thank you for that. So I think in terms of trying to limit that risk as much as possible, in terms of trying to determine a country's potential, it's also good to look at how policy is within that environment. So what are the authorities driving in terms of policy direction? Which sectors are they trying to promote? What initiatives are they putting in place to try and support growth in those sectors? And would these then be available to investors stepping into that market? So I think doing quite extensive background research in terms of not only just the potential that's seen in terms of the economic structure, but also what deliberate measures are being taken to try and develop that potential as well.
Maybe at this point we could talk about one of the points that you raised, right? Like sectors that maybe an economy is trying to push. In an economy that is emerging in Africa, what would you say would be some examples of sectors or economic activities that investors could be investing or putting that money into, looking at the various markets that exist, especially in Africa?
Great. I think the best example I can give is our own. So in terms of Botswana, for example, we have a very deliberate effort to try and diversify away from mining. So the government has highlighted certain key sectors they wish to help drive growth. And this includes agriculture, for example, manufacturing, tourism, and the like. So in terms of agriculture, over the last couple of years, we've seen them put in place import substitution policies, basically trying to allow local farmers to ramp up production or to get at least that expertise coming to Botswana and actually setting up ground and operations in Botswana. We've also seen them offer incentives essentially across some of our special economic zones, That's to try and ensure that individuals firstly invest in those areas and receive certain tax relief as well as other support to ensure that the country is able to move away from mining as well as create opportunities for some of our unemployed population. So those are some of the key examples of potential being developed deliberately by government, as well as initiatives to try and promote foreign direct investment. So you have BITC, for example, deliberately going out to try and attract individuals or investors to invest in Botswana around certain key areas, especially those aligned to the ones I just mentioned as well.
One of the buzzwords that have been making the rounds is economic inclusion when we're talking issues of economic diversification, economic growth, and of course foreign direct investment or just investment in general. But do you think that's something that maybe could buy out investors or actually entice them into making a go into investing into certain economies?
So absolutely. Key area that you pointed out is economic diversification. So I think the main spirit behind the Economic Inclusion Act is to ensure that Botswana are part of that diversification. They take a more meaningful role in Botswana's diversification, as well as Botswana's economic discourse in general. So it may appear that it could be interpreted as being not investor friendly. But in perfect honesty, the Economic Inclusion Act is only bringing to power policies that we've had in place. So assuming that corporates follow policies and the policy direction as laid out by the government, it shouldn't really present too much of a headwind for investors to come into Botswana. I mean, this speaks to basically skills transfer. So reserving certain activities for Botswana or subcontracting a certain level or whatever contract has been awarded to foreign investors to Botswana as well, to ensure that that skills transfer does happen. So the opportunities still exist for foreign investors. I think the Economic Inclusion Act just calls for more Botswana to be involved in whatever activities that they choose to take in Botswana.
Gomolemo will be back again next time to talk about pillar number 2, which is market accessibility and innovation as a key pillar when you are an investor looking for new investment opportunities. For now, we go for a commercial break. Stay tuned to First Issues.